So it turns out that NVIDIA is now down 30% from its all-time high, and its PE is only 58. I think it's probably time to kick out Jensen and then check out and find out if Ross Gerber has time to possibly serve on their board of directors. I suppose maybe they should do some advertising that could turn things around. And then Jensen needs to stop being distracted by trying to save the world. What do you think? So with regard to today's show, I would hang around until the end of the day. There's a super interesting take on the economy from Bank of America, and then another stab at the Fed from Jeremy Siegel. Both of those worth waiting for. All right, let's go ahead and take a look at Tesla news. Right now, we've got Alex reporting on China sales. China sold 74,100, this is Tesla, sold 74,117 vehicles in July. That's up 15% from 64,285 a year ago and up 4% from June. Then they sold 46,227 in China. That's up 47% from a year ago and down 22% from June. The exports were down 15% from a year ago, but up 137. So a little bit of, I guess, shifting in terms of the import and export portion of what Tesla was doing with the cars. But overall, the China numbers were fantastic. Well, what about their car sales in general? Well, sales of electric vehicles and hybrids in China surpassed that of internal combustion engine cars for the first time ever in July, despite weak overall demand. This is according to the Wall Street Journal this morning. Retail sales of new energy cars, a term in China referring to EVs and hybrid combined, made up 51% of all passenger vehicle sales in July. This could happen in the United States. It will probably happen in Europe before it happens here. Remember, some of this in China, it has to do with the fact the Chinese government is pushing very, very hard to get this to happen. In Europe, it's happening very much because their price of gasoline is much higher because folks have to pay massive taxes. And then, of course, in California, we have a similar situation where the tax on gasoline is so high that it drives the price super high. The Midwest, the rest of actually the country in the United States pays some of the lowest prices for gasoline anywhere in the world. And that, I think, is the biggest thing. Maybe with charging networks being second as to why we're not seeing the same kind of results in the United States. Anyway, sales of EVs and hybrids rose 37% from a year ago in China to 878,000 units, and conventional cars dropped 26%. The industry body attributed the higher proportion of new energy cars to factors including the country's edge in EV and hybrid plug-in technology, as well as more aggressive incentives. Yes, there you go. More aggressive incentives to make the cars and, of course, the small cars. Retail sales of passenger cars fell 2.8% total. It was giving some indication of the economy in China, which ain't great. So AJ provided us with an elaborate and detailed summary of his third quarter estimates for Tesla. He sees increasing auto sales, overall total unit volume. He sees slightly decreasing average sales per car, primarily because he thinks I'm not sure why. Even with the Cybertrucks built in there, he still thinks the overall ASP will come down. He sees decreasing margins through quarter four. He also expects lower energy sales than the second quarter. But with the pickup in overhead, we have lower overhead due to the cutbacks. The final result is a positive. He says he thinks the EPS will be 43 cents, which is, the EPS will be up 10.7% to 58 cents per share. Anyway, that's what he's seeing right now. AJ is his expectations. This is from investing.com this morning. RBC Capital has adjusted its outlook on Tesla. It's reducing the electric vehicles price target all the way from 224 from 227, dropping at $3. But holding on to its outperform rating on the stock, signaling confidence in the company's prospects despite a minor revision in its price target. The price adjustment comes amidst a broader market slump affecting the entire automotive sector. We talked about that last night with Jeff Lutz. If you want to go check that out, You can go see from last night. We talked a lot about what's happening overall in the United States automotive sector in a slump. Really not seeing it yet in the company results because it's all ending up in the inventory on retail lots. Tesla, however, is highlighted as a potentially attractive investment during this period. RBC Capital noted that Tesla stands to gain from an increase in regulatory credits and its growth in the energy storage business, which we just talked about with AJ's report. This is their this entire report comes from what they call on investing.com. They call this their investing pro column. And so up till now, they're quoting RBC, but then I read the rest of the article. And if their analysis of other companies is as poor of the analysis that they do on Tesla, do not go to the investing.com pro columns that they put out. I don't know. That's just one example. I guess it was not good. It was just lousy reporting. That's all. Cern will be on later today. This is Randy Kirk. So you want to hit notify if you want to be able to see Cern and see all the cool stuff that he puts out. Bradford Ferguson, of course, on Wednesday night. This is Thursday. Bradford Ferguson will be on Thursday night later. And there's going to be lots of good news because you see already it's all good news, including the stock up. Last time I checked, we'll check on that in a minute. All right, let's get into some of this. Patreon, that'd be good. Patreon, joining Patreon, going down to the description and joining Patreon. In the week, this is from USA, in the week ending August 3rd, the advance figure for seasonally adjusted initial claims, this is initial jobless claims, was 233,000, a decrease of 17,000 from the previous week's revised level. The previous level was revised up by 1,000 to 249. From 249 to 250. The 4-week moving average was 240,000, an increase of 2,500 from the previous week's revised average. But nobody's paying any attention to that. And they're not paying any attention to the total number of continued weeks claiming for benefits in all programs for the week ended July 20th was 1,960,000, an increase of 21,649 for the previous week. These are the two things that nobody's paying attention to this morning. I think the market was looking for a chance to rally. I think that they're it's been beaten down. People were, I don't know. I think this is a complete wrong-headed move by the market this morning. Don't get it. Don't understand it. Don't understand why the bond yields are up this morning based on this information. Everybody's saying that's because of this report. And I think it's a big mistake. We'll see whether later on in the day the market realizes its error and starts to go the other way. Now, there's also this, not the end of the unwinding of the Japanese yen problem. There's no question that the Japanese central bank decided to cool it, and that might be also impacting. But if people think it's because of these employment numbers, they are making a sad mistake. Markets like the number suggests a soft landing without reducing the chances of the Fed to reduce rates, but then how come bond yields went up? Partially, maybe that could be also due to the big sales over the last, there was a big sale, bond sale on Tuesday that went okay. Wednesday did not do well at all. And then today, we've got another bond sale, the 30-year bonds. And so it'll be interesting to see how that impacts the market. But overall, getting harder and harder to sell these bonds. And that is, of course, driving the yields up. Jamie Dimon says he still sees an inflation risk. So if the Fed sees the same, they could go higher for longer. And of course, that should make the markets really jittery, but they don't seem to be caring today. The small variation seems, yeah, I've already said that. Okay, let's go on. The VIX is sitting at 28 last time I looked. So there's still a lot of fear out there, even as the market is up this morning. All right, this is from Business Insider. This is the one I've been telling you about earlier. It's a little long, but hang in there because I think there's a chock full of information that you should care about. Bank of America says today, sell equities into the Fed cut. So I guess they'd be saying, around September, whatever it's going to be, 10 or whatever, roughly, maybe even earlier in September than that. When the Fed makes their decision, that's the time to sell. Hartnett and his team studied the last 12 rate cutting cycles going back to 1970, and they identified 3 varieties of rate cut. One is when the Fed panics from a financial crisis of some kind. Another is when the Fed cuts into a soft landing with no recession. And the third is cutting into a hard landing with a recession. In the first 2 scenarios, the S&P has risen on average over the following 3 and 6 month periods. But when the Fed cuts into a hard landing, stocks have fallen by 6.2% in the 3 months following the first cut and 3% over 6 months. So Hartnett says we say sell the first cut. The analysts show that this hard landing cuts occurred in 2007, 2001, 1989, 1981, 1980, 1974, and 1973, if you want to check those years out. Hartnett said surging global central bank rate cuts are signs that the economy is in for a rough stretch. This tends to occur when the economy is in trouble. So you got China in trouble, you got Europe looking soft, you've got Japan continuing to be a problem. So overall, the world economy still impacts the United States economy. And that's just one more thing out of all these things that to me are indicating recession. Bank of America also expects 12-month forward corporate profit growth expectations to fall by more than 50% from July to December. Now, this is not growth falling 50%, growth expectations. So right now, what people are thinking is going to happen, that they believe will be cut in half. The rise in the unemployment rate to 4.3 is officially triggered this April. We know about that. And then recessions have always started before the indicator is officially triggered. That's why I believe it started in June. On top of this, Hartnett said the recession risk has been underappreciated, with Bank of America's July Global Fund Manager Survey showing money managers assigning 11% chance of recession in the next 12 months. So this is, I think they're just, I don't know. I thought I was the optimist. Stock market performance has been extraordinary leading up to the cuts as well. The S&P is up 32% from the 9 months heading into the end of July. The number has been averaging 2% since 1970 heading into rate cuts. Investors expect the Fed to cut rates for the first time in September, but July's lackluster jobs report is prompting some market onlookers to question whether the central bank could issue an emergency cut earlier than that. Markets are now pricing in an 83% chance that it will be 50 basis points in September. Should the slump in risky assets, the risky asset prices extend significantly further, that emergency cut by the Fed cannot be excluded, according to John Lewis McNamara, head of Conviction Equities. Okay. Like Hartnett, Michael Kantrowitz, the chief investment strategist at Piper Sandler, said last week that he sees stocks to fall alongside rate cuts. By the way, I don't believe this. I happen to, I'm contrary, so I always have my own version. And so far, by the way, for the last 9 months, I have been 12 months, for the last 15 months, I've been the guy that's been right over and over again. Now, we may not have entered recession in June. We may not have a lower GDP in the third quarter, when all is said and done, but that's my projection. And so far, up until the second quarter, I've been right, where pretty much everybody else has been wrong about the economy and about inflation. Hartnett's comments come as market plunged into uncertainty on Friday, a mood that carried over into Monday's trading, and we're still sitting at that 28%, that 28 VIX rating. Quite frankly, the sell-off is now overdone, said Jim Spiegel. I do not think so. I think it's going to continue on down. Emergency Fed rate cuts being priced in makes little sense given the economic backdrop. He thinks everything is okay. All right. So then recession risks have been underappreciated by investors. On top of that, Hartnett said the recession risks underappreciated and believe that there is a much better chance of recession than is being planned right now. All right, let's see. I got to go on here. Quite frankly, I think I doubled something. All right, Jeremy Siegel. This is from MoneyWise. While Siegel's message to the Federal Reserve is clear and assertive, CNB host Joe Kiernan is skeptical whether the Fed will cut 75 basis points before the next meeting and then another 75% in September. There's no reason to think, given how long it took them to move off to zero, that they're going to take your advice on this, Kiernan told Siegel, asking what the outcome might be if the Fed remains inactive until September. Siegel expressed pessimism regarding such a scenario. I think the market will react badly. Very honestly, he responded. Siegel is very forthright in his critique of the Federal Reserve's pace of response to the economic shifts in the U.S. If they're going to be as slow on the way down as they were on the way up, which, by the way, was the worst policy year in 50 years, then we're not in for good times with the economy, according to Siegel. And I think something in the middle. I continue. If you're interested in my opinion, I will continue to give it. I think that we're in a recession now. Third and fourth quarter for sure will be lower GDP. Fourth quarter, probably lower GDP. Probably positive in January. Shaky. They haven't made my final decision on first quarter. By the second quarter, we will be off to the races. It'll be incredible. It will be one of the biggest booms ever because of the things that are happening with regard to AI, with regard to Tesla, what they're doing with robotaxis, and with Optimus coming after that. Yeah, I think we're going to see an amazing market by the second quarter of 2025. And I also think that the market right now is going to correct all the way to a bear, and then we will be up 5% from the recent all-time highs by the end of the year, because it will be projecting and predicting that breakout in the second half or the second quarter of 2025. That's what I think is going to happen. We'll see. I'm probably completely wrong. But you know, and the fact that I've been right for the last 18 months or whatever it is probably an indication that I'm going to be wrong this time. I don't know. What do we even know? Let's take a look at where the markets are now. Okay, the Dow is now up 556. This is not a response to those employment numbers. This is impossible that it's a response to those employment numbers. It makes zero sense. This is a relief rally of some kind. It's kind of like okay, we've gone down far enough. We're going to, it's because we've gone down a lot. The NASDAQ up 301, S&P up 87, Tesla up 446. Tesla not participating as much, and that's true of the Magnificent Seven, except for Meta. Well, let's take a look. We'll look at the percentages in a minute. All of the Magnificent Seven are in the positive territory, as are all the Cathie Woods. And, it's some good numbers, some decent numbers there. Let's look at the percentages here. We have got Dow up 1.47%. This has nothing to do with those numbers. NASDAQ up 2%. S&P up 1.76%. Tesla up 2.59%. Normally, it would be up more like 4%, so not quite participating at the same level. Apple up 1%, Google 2%, Amazon 1%, Meta 2%, almost 3%, Microsoft 1.7%, and NVIDIA up 2.74%. So a very, very strong market this morning for everybody. Everybody's having a good time, rallying out of what has been going on recently. Now, when you look at that and you're thinking, well, then the bonds must be dropping like a rock, because of course, that's what the economy would expect. Well, okay, except that the bonds are barely hanging on for dear life under 4%, up 3 basis points this morning, 3.998. It's been sitting in that 3.9, 3.95, 3.98 for quite a while this morning. It's bouncing back and forth, does not seem to want to break through 4. You got the 2-year at 4.06. So a little over 6.5 basis points spread on that inversion. The 2-month, ridiculous, 130. 10-year just hit 4. Believe it or not. Now, it might have earlier because I'm not watching it every minute, but it's exactly at 4 as I'm looking at it right now, back down to 3.99. Okay, let's take a look at the rest. We have got the oil unchanged on the Brent, up 21 cents on the Texas Intermediate. Normal $3 spread between them, so nothing to report really there. Oil still beaten down at $75 on Texas Intermediate and 78 on Brent. Natural gas down 3.5%. However, hanging out above $2 at this point. It was under $2 yesterday. We'll see. It looks like it, could go back under 2 today. We've got gold up $26, recovering a lot of that downward from the last few days, sitting at $2,459, but still about $70 off of its all-time high, maybe even more than that. It might have been 25. I forget exactly, 25. Do you guys remember? Put it in the comments below. Okay, silver. We've got silver up 2% this morning at 27,495, but still way off of its all-time high. And copper actually up this morning at 0.29, but still under $4, so $3.96 right now. All right, then you got, here we go. I'm sorry, okay, let's go. Dollar up against the yen, 0.38, not a ton. Down against the euro, again, 0.20. So not a lot of action in the dollar this morning. And then you've got Bitcoin up 3,335. No volatility in Bitcoin, 58,180. Holy mackerel. And then there you go. That is all that there is to report about all of that. Now, yesterday, Scott Walter and I did there hasn't been a lot of news recently on Optimus and about Figure, but yesterday there was. And so I highly recommend you go take a look at that video yesterday with Scott and I. I'll put that card up there. And then you check us out later today with Cern Basher coming and Bradford Ferguson later tonight for the Good Times show. And join Patreon and hit like and do all that stuff. And let's go back one last look. Tesla up $5.23, and there doesn't seem to be any hesitation in the markets to go just like that this morning. It's been great talking to you.